Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. I'm going to start the show a little differently today because we're having a lot of, really weird stuff happening. And not that it hasn't happened before, but not on the same subject matter, of course. We haven't seen disease like this hit, and we don't know what's happening, folks. I really stress pay close attention to who's saying what and why, because I just don't trust the dudes. All right, I posted a chart of the volatility index. It's one thing if you belong to the newsletter. I've said every time that VIX got down to 12, put an insurance policy into your pocket and you should be okay. And, who's calling there? 3590. I'll be darned. 558-3590. I don't. Oh, that's Stan Harley. Just a minute, boys and girls. Hold on just a second here. Oh, sorry about that. That was Stan. Stan has been skiing in northern Mexico, not too far from where we are here, and he's just not prepared today. And he said the volatility here has, thrown his numbers out of whack, and he said he's just really not prepared, and so he's going to come to us next week for sure, which I appreciate that. That's why I got that phone call. I saw the number and I recognized it, so hopefully that'll take care of that. All right, we looked at that VIX on the daily. Now, folks, let me just give you an idea of relationships. Here's the VIX. This has nothing to do with disease. This had to do with money. This is when we were, going under. Remember when the end of the world was there, the Dow was trading at 6,400? That was in 9. This was the height of that thing. So what you want to realize, you can see the largest up-day move ever that we had. The VIX went all the way up to 50. Now we're at 40. I think we're at 47. I think we hit this morning. I'm not sure, but I heard somebody say that. And, I believe we're still probably going to go a little bit higher, but we'll have to wait and see. Now, the other thing that I see happening, and that is in the bond market, the bonds got up to, they hit 170 in the nearby bonds. Then they sold off a quick point from that level. So there's not much going on in there. And the other thing is that, the gold, they thought gold was going to be a flight to quality. Well, that was wrong. And because it's broken again, and it really looks bearish. We'll talk about that in just a second. But this is my 2 cents worth. And you believe me, I'm not, no, Carlos doesn't come till 8 o'clock. Very good. Do that. Carlos is the young man who's been washing our cars for 25 years. He's got a whole fleet of trucks. Well, he's got 2 trucks, but he's got a whole group of guys that go all over the city, and they come to your house and do a really nice job on your car every week. Anyway, let's talk just a little bit about the bonds. I really think they call these bonds a flight to quality, folks. I think that's like inviting an arsonist in with a blowtorch for dinner. I really don't think that's the place to be, because the real problem in our economy is the amount of debt that we have. And this is a great way to bail out the government, because you got the low interest rates, which is good. They can sell as many bonds as they want because everybody wants them. And that's what I think. And I think Marshall says a bear market, everything goes down. And I think that's the one you have to really be careful of up there, because I watch what's going on, and it's really, it's really amazing to see it. But we've had this tremendous volatility in the stock market. Just to give you an idea of what's really happened in the stock market, one of our listeners today sent me a really interesting chart from the President Bloomberg. Oh, he's not president yet. Hold on, let's get this up here. Get this here 1 second here. You'll take a look at this. Is from Bloomberg. Basically, folks, this is the fastest 6-day correction we have ever had in the stock market, 10%, and that includes 1929. Oh, we got Bill Chapman on the line. Bill, how are you?
Very good, Larry. How about yourself? Excuse me.
Very good.
A little tightness in the chest.
Well, I think everybody trading the markets has that.
Now, I don't know if you looked at my AM call yet this morning, but I wanted to go through that with you real quick.
Why don't you go ahead and do that? That would be great. I think I can post it here for the folks if they'll just give me a second. What are you thinking about this volatility, Bill? You think we're near a bottom, or I'm
actually loving it.
Well, yeah. Well, everybody that's trading does.
On my AM call, I had said, despite an overnight low of 30.59, none of my bottom indicators have come to life. What's interesting is that my crash indicators have started to signal. Pay attention here. Yesterday was the pay attention day, plus or minus 2 days. The crash indicators are signaling a market collapse between now and March 3 to 5th.
Yep.
The new forecast for a bottom in the ES is in or about 29.37 level. Below that, 27.11.
Okay.
I'm not expecting any Fed intervention here, as they've been draining liquidity from the marketplace. Now, this morning I was pleasantly surprised to see, when I opened up my trading platform, that on the bid was 29.37. What's important today is that some takeaways from yesterday's trading is to keep an eye on your platform. If it starts to act glitchy and get slow, do not trade on that platform. You don't want to get stuck if the platform goes down.
That's a very, very good point.
And watch any throttling on your internet speeds.
Wow.
The spreads are wide. The market is fast. And don't be surprised if you're getting filled 2 or 3 points through the market on a market order. So you got to be selective in your pricing. Volatile markets are calling for wide stops here, Larry.
Yeah,
and if you're uncomfortable with trading with wide stops, don't trade.
No.
And finally, trust your moving averages and trade with the trend.
Okay. That means don't look for a bottom. Hey, listen.
If you get the AM call, you put it up from Trend Reaction, Bill Chapman at trendreaction.com, you're going to see exactly what my thinking is today. We could do a reflective bounce up because the market makers are net short right now, and then just trade down like we did yesterday. Or if you find yourself running through a consolidation band where we're unable to break the low of the day, then they could very well rally in through the afternoon. It's a long trap. Don't get yourself holding overnight on the long side.
Yeah. Well, we'll certainly be watching that. And how about next week? Maybe you could come on Wednesday.
Maybe I can.
We'll see if you can. Thank you, Bill. Bill Chapman. We'll be right back, folks. Daily Trend Forecast. We'll be right back. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we are going to take a look here at this E-mini S&P. That was Bill Chapman, folks, from Trend Reaction, and he was warning us the fact that liquidity could get pretty limited here because of people putting their bids and offers very, very far apart. The other thing he mentioned is to watch your computer, because if it starts sticking a little bit, that means there's too much volume coming in and they can't get it to you fast enough. Some of them is worse than others. But I posted a chart here, and he mentioned the price of $2,700 in the E-mini. If you look at this chart here, going back to January, remember we had that low back in January. That's a 61% retracement of the low in January, and it's also a 1.618 expansion of the range that we've had since September. In other words, if you'll notice, the range would come in right at about the 2680 area. So that's going to be very interesting. Remember, folks, if we can go from 3390 to 2880 in a matter of 6 days, we can certainly make that without any trouble. Now, the chart that I posted earlier from President Bloomberg, oops, I keep saying that, don't I? Doggone it. I'll do it again. I just want to repeat, because this is different than what happened than what we had here. If you'll take a look here, you'll notice here, folks, that we have a situation where the market has dropped the fastest on record of 10%. In other words, from any peak, 10%. Back in, and I'll go through 1929 here in just a second. But you'll notice here, it usually takes 180 days to make that. But look what it's done here. We've done it here in just 10 days, and it's just started. We haven't made a bottom yet, folks. Even if we get a rally here, there's something really wrong. Remember, we had Arch Crawford on yesterday, and he's saying that there's enough astrological stuff out there. Well, I don't think I don't know the answer to that question, but just the way that the world is. I mean, the news comes out. I mean, you don't know what's going to happen over the weekend. I mean, it could be good, it could be bad, but even if it's good, people are not going to believe it. That's my 2 cents worth. So this hasn't we haven't made a tradable bottom yet. We could be close, and maybe, if we make a little bit lower low this morning, that might be it. So we'll have to wait and see. If those of you, what I did, of course, last night, I'm pretty active here working with Tom, but we were watching the market very, very closely, and this is what we were watching last night. using the AI program. And if you notice, when we were down to this 2886 level, we were saying that right around that 2880, there should be a relatively good bottom at 430. The low was 2878, and from that level, we had a pretty substantial rally that got all the way up. I'll just bring it up to date here to see where we are, and then we're going to look at this here, and we'll take a quick look at it. You'll see that it went all the way up. Look at that number that it hit last 2950, folks, right on the money. And now we're coming down. Let's see what's going to happen. This might not work. Hell, it only works part of the time, but let's take a look at it for today, just to see if in fact it's going to do anything. Because if it does, there'll be some big swings in here. Hey, folks, we're having 50, 80, 70% swings overnight. This is the kind of stuff we don't see in weeks, and yet we're getting it very, very quickly nowadays. So here's where we're looking at it right now. I posted this up just a little while ago to our folks, and you'll see here. Here it is, right here. Okay, now this is where you want to watch 9:15. That's in right now. We should be making a bottom right now. How much of a bottom? I don't know, but what you'd like to see, if it's going to be any good, is you're going to take 2880 out by just a little bit, and then it'll snap right back. Folks, this had the window of 10 minutes or 20 minutes, 10 bars. If this thing keeps going down after 9:30, there's something wrong, and you don't want to be standing in the way of this puppy. So that's the main thing. And the other one we were watching last night that was very interesting, and that we're quite bearish on, and that is the gold market. You'll notice here. This is what we were expecting in the gold market, and we came up and do it. The reason why I'm showing you this, folks, I'm trying to show you some of the new technical stuff that's out there that sometimes it helps, sometimes it doesn't. But then you'll notice here what happened to the gold, and this is what's interesting, and this is why when these patterns fail, that's not a very good sign. You can notice here we had a really nice Gartley there at 28, and by golly, the market rallied up to 34, and then it came back down. That means it's not working anymore, and that's when you have to get out. If you remember the platinum, I sent out a special video last night about the platinum because, we had a nice rally of about $9, and boom, back down to half a dollar where we had bought it from. And I said, no, we don't want to be in this one. And so platinum's down another $22 today. So it's all about the money that you don't want to lose, folks. It's not about the money that you're going to try to win. And that's the main thing, to keep a close eye on these things as we go through the trials and tribulations. All right, let me give you my 2 cents worth on, folks, I don't know if this is going to be a crash type scenario or not. I really, truly do not know. But all I do know is that everything's going to be okay. I mean, we're going to get through this. This is not bubonic plague. This is not some of the other things. Let me share a few quick charts with you before I move on to this 1929 stuff. Let's get this up here. I want to show you, this was a real interesting one sent to us by one of our listeners, just to show you the ramifications of where these things could go. This is the NASDAQ, and if you'll look at this, going back since 1991, look where we are, folks. I mean, you see what a correction could be? Shut the front door and raise the rent. You don't know, so you got to be really careful. This market has been very complacent for a very long time, and that's the main thing that you certainly want to try to remember. In the crash of 1987, that was very predictable, because on that Friday, the 16th of October, the Dow Jones closed down 104 points, breaking some pretty good support. I remember it very well because the Elliott Wave people came out with a buy recommendation. Of course, they canceled that right before the open, but it was, and it was a low. The low was 2 days later, but it was really, once that happened, that was it. And what happened in 87 was Secretary Baker, James Baker, was over in Japan, and they were trying to work out some kind of a one of those deals that they work with. And he came out and he said the word regrettably. And when he said the word regrettably, that sent the foreign exchange markets wacko. The Swiss franc, there was no euro at that time. There was Swiss franc and British pound, all those Japanese yen were really going nuts. And so that made gold go up $25. We didn't have overnight trading. And then, of course, the market opened about 150 to 200 Dow points lower, as I recall. No Dow E-mini trading. We had the E-mini S&P, no NASDAQ yet. And as I recall, I could be wrong on that, but I know the S&P was trading because it started in '82, and it was trading at around 260, and it got down to 210, 205. I know it was, and believe me, folks, that was $500 a point, not $50 a point. So you can imagine, what would happen. The thing that was most amazing there, and what Bill Chapman talked about, was during that crash, the bid offers on those contracts was $5,000 to $10,000 to $20,000 at times. In other words, the difference between the buy and the sell. So that's what you don't want to get involved with. Hey, we're going to be okay. So, enjoy the process, learn from it. Hell, you'll have to be able to tell your grandkids about it. What the heck? 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're right in magic time, folks. This is it. This is where the fat lady's singing. I can hear the orchestra in the background. Thus far, we've made a new low in the S&P overnight. We have not made a new low in the Dow Jones as of yet, nor in the Nasdaq. But they are hanging on to the edge of the cliff with their fingernails, and on the fingernails is mineral oil. Makes it very, very slippery. So it's going to be really important here. The only way I would do this is be to buy a little strength after these bottoms come in, if in fact that's the case. But we'll watch it anyway to see what's going on. Gold continues to fail, folks. Let me show you. This is going to be a really good buying opportunity for gold. Let's get it up here. We've been talking about this for several days. Yesterday, the fat lady let the orchestra out early and started to sing, and you'll notice that the gold finally broke down. We've got down as low as 2016, or I forget the exact low. We're trading around 22 right now. You can see the perfect ABCD pattern on the way up at the B point where we made a 50% correction, exactly 55%. And now we're heading down to the looks like 1598 level. That's not very far away. We could be there by the time this show is over, the way gold jumps around. The key level here, if you look on the far left, you'll see that 1.618 marked there. Once we broke that, you notice what happened? We hit it twice as major support. And then once we broke that broke at 1628. That told us that we were most probably heading down to this level right here. A big drop in platinum. Platinum failed the ABCD pattern badly. Fortunately, we got out of that with just a $0.50 loss, $50. So that wasn't too bad. Now the Japanese yen is acting, incredibly well. It's up now 3 handles from. The buy point that we had at 89.40, it's acting pretty good. The euros had a pretty nice run. It's backed off a little bit, but pay close attention to that euro. Let me see what that key level is in the euro, because it's. I was watching it just a little while ago. That comes in at 109.50. We're trading at 109.73 right now. But watch that 109.50 in the euro. That's going to be a really interesting one to watch closely. For sure. That's the main thing. Okay, let's get back here to 1929. I know you want to hear this because I was the only one here trading at that time. And if you believe that, I still have 2 shares of the Brooklyn Bridge. There's all kinds of charts on the internet that you can get. I got this one out just to show you the main thing that I wanted to give you an idea. The market topped on September the 3rd of 1929 at 383 in the Dow. Okay, the low came in 1932 on July the 8th, as I recall from Basil Chapman. The Dow was trading at 42. So it went from 383 to 42. 16 of the Dow stocks went bankrupt during that time. American Telephone went bankrupt twice. But folks, let's take this in perspective just a little bit, okay? Because this is what probably is happening. 1929. What was going on in the world in 1929? We had the Roaring '20s. What was happening? We were getting electricity, indoor toilets, automobiles, refrigerators. Oh my gosh, radio, then television. All these wonderful telephone, all these wonderful things, and yet the market dropped, 89%. Hello. I mean, that's a huge thing. Now, I don't know if we're going to go through one of these things again, but look what happened. You'll see that first little dark black arrow there that's pointing up right after the top was made. The crash came in later on. If you'll notice that crash came in on October the 29th, 1929. And then you see the red arrow. That red arrow was a 59% retracement, not 61, but 59% retracement into April of 1930. And that brought in the Big Depression. And bada bing, bada boom, you see you came down, and that's what happened. And you'll see what happened. See, it bottomed. Oh, I did this wrong. I'm very sorry, folks. That's wrong. Judge's ruling. That red arrow should be over there on, you'll see it there where it says May 2, 1930. It was April. April the 1st is when that thing actually topped, right around April Fool's Day. And that was a pretty much a 50% retracement. Well, it says 47% retracement of the high that we made. And from there, that triggered in the Big Depression that lasted until the war, right before the war, and then we had started the rally. Folks, it took the market 27 years to take out that high at 383 in the Dow. So that's another one that we want to pay a little bit of close attention to. So we'll see. Well, folks, it looks like that bottom might have held. Shut the front door there, Gomer. My golly, we only have one running here. So pay attention to it. This could be a really important bottom there because it came in at exactly the right time. And whether it's going to continue to do that, I don't know. We've got gold selling off again, so we'll watch it closely. The bonds are still holding up, where bonds are still trading at 69.13. That's, to me, that is the boy. I tell you, I don't see why anybody would want to be long bonds, but I guess if they're really scared, I don't know. Folks, if we go below that low we just made a few minutes ago, forget about it. Forget about it. It's not going to be good. But if it holds, we could have a pretty good rally into Friday, and everybody be a little bit complacent. But I wouldn't be long stocks over the weekend, no matter what. But that's probably the best buy signal you've heard in a long time, so we'll have to take a look at it. Anyway, we'll just look at some of these things as we go through here the rest of the day. I really feel strongly about that gold, folks. Those of you that like gold, I'd have an order sitting in there right under 1,600. Unfortunately, with this volatility, you're going to have to probably use a $20 stop, unless you go to a 15-minute chart. But watch that gold at 15.95. That's going to be the first big ABCD correction. I mean, big one. This is the first big ABCD correction. This one would be, well, it's not that bad. It's only $100. Yeah, we had a $100 correction about a year ago in 2018 with the bottom in December of 2016. So this has still got a chance. So I believe that's where we're headed, but we're going to be looking to see if that's going to be what we're looking at right now. I wanted to review yesterday just a little bit because, oh, that's not what I wanted to see. Hold on just a second. Where is it? Where did I put that thing? Oh, shucks. One of my little mystery charts. Okay, let's get back. We've got a question from somebody else. Let me try to get this up here. And, here is the Japanese yen. I reposted this last night because the market really started to accelerate. You notice we had this is a 60-minute chart on the, this is the one that Marshall was buying there when we got down, finishing that ABCD right at the 61% retracement. It's gone now 2 handles up, folks. From there, you see the long came in at 89.40. That was a long-term Gartley pattern on the daily 1.618 expansion. That's why those just we'll be able to see that. The Dow Jones did not make a new low this morning yet, or has the NASDAQ. Now, I don't know whether that's going to happen or not, but that's neither here nor there. Someone's asking me to bring up the platinum picture, and I'll do that because I reposted that this morning in a video because I thought it was very important. We got down to that 03 level, folks, and we had a pretty good rally, and then the market just gave up the ghost. We ended up getting out of it at we bought it at 05 and we got out of it at 03.50, so we lost $75, but it's a whole lot lower than that, and looks like it's still going to go lower, as is silver, but we'll see. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and I wanted to talk a little bit about that low we just made in the S&P, folks. That can be a short-term low. Remember, these are based on 2-minute bars over a 24-hour period. Each trading session is 288 bars, so they're pretty accurate. But when they fail, it's really, really important. I'll post the gold one, and you can see here that the gold should be still coming down here till about 10:30, and then we'll see what happens with that. But it's very, very important now that we do not take that low out that we made this morning here in the S&P here down there at 2874. That was 4 points lower than the one we made last night. If we do that, that means that this thing is going to go down a great deal. So we'll wait. If you remember, we had Arch Crawford on yesterday, and Arch was saying that, the odds of a crash coming in between the 2nd and 3rd, that's Monday and Tuesday, are quite high. I don't see how anybody could argue with that because of the market dropping 10% in a matter of 6 trading days. Anything could happen. In fact, it's record-breaking, and you want to be careful. I know that the premiums on these puts and calls are getting a little out of hand, and you have to be really careful. Bill Chapman this morning told us to worry about that, and I think it's very important if you start to see these swings do that, you'll be really interesting. Now, we're within a heartbeat now of the euro coming down to very, very key support. We're within about 10 pips. So watch it very closely there, folks, at that 109.48. We're about 7 pips away. It must stay there. If you see a trade at 109.39, in other words, 10 pips below that level, there's something wrong. That's how accurate these numbers can be, and so you want to sort of keep a close eye on it. All we've done so far is do pretty much what we thought was going to happen. But, like we say, we don't know what's going to happen next. These are short-term windows, folks, of what price action looks like. In other words, if you're looking at a price and time axis, we spend all of our time looking at price because we can see that. Time is the most elusive. What the AI does, the neural network, it looks at differently. It looks at the time. It sends out vibrations on the time cycle. And it tries to pick out things that have happened in the past, and then it matches them to see what could happen in the future. And sometimes it works, sometimes it doesn't, but when it works very well. But when it doesn't work, it's still working. You just have to reverse it. That's the main thing. Look what's happened to the S&P. We had a move from 2874 all the way up to 2930. The 61% retracement was at 2921. We're already back to the 61% retracement at 2905. right, folks. This market is far out of the wood from being out of the woods. I mean, we're coming down as fast as we went up. So this might only be a very temporary low. So I think it's important to remember that the bonds are still holding themselves up here at that 169.18. If you remember, the number we were looking at was 169.06. We did hit last night. We hit 170.06, and the euro had just hit the magic number. So let's see what happens with the euro here over the next. I think that the number is 109.49. The limit. My order was 109.50. Anyway, keep an eye on this euro because this is a really important spot here in the euro. And then also the lows that we've had here in these markets, you have to be really careful. The Dow Jones, folks, this just give you how crazy it is. We went from 24,900 to 25,400. We rallied 600 Dow points, and now we're down 400 of that 600. All it did was make a 78% retracement of that overnight high. The number you want to watch is 25,600. That's 550 points. If we don't get any higher than that today, I would be short overnight. 25,600. Watch that number very closely, because that is going to be a key number to pay close attention to. Okay, the euro hit 109.49, and we're trading at 109.56. So we're going to close that trade out. Not quite, but put your stop in if it's there, and we'll see if it's going to mean anything, and we'll go from there. Okay, any other questions that we might have? 877-927-6648. Al said that the lines are jammed up. Let's talk a little bit about commodities, folks. They are literally beating the pulp out of commodities: soybeans, wheat, corn, everything, copper. They're just beating everything, platinum, everything up. And that's because we don't know where the supply chain is going to be. I highly recommend everybody to have some tissue paper, rolled stock certificates. Make sure you have plenty of rolled stock certificates, water, and dried foods. Because if things get really crazy, and who knows, with the news out there, you could get some political party in Russia or Timbuktu or Afghanistan somewhere to do something really crazy on top of the problem that we got right now. Hello. You don't want to have that happen. So let's remember that we live in interesting times, and that's a Chinese curse. Not a poem. So I would recommend getting some water and canned goods and stuff. Our family, of course, we could thrive on spaghetti and rice, which is good, and then I'll have some cereal, dried milk. Get some dried milk if you need it. Have water on hand, and have some cash, folks, because if the electrical systems get into trouble, you got to have a little cash to pay for things, because they don't take credit cards if the electricity ain't working. So then, hey, this is nothing like Y2K. I mean, Y2K was, they were ready for the end of the world. My good friend Arch and I, Byron and I and Arch and Mark Douglas, we went to the gun show to buy dried foods, and Arch bought a year of dry foods. It was like $3,500 or something like that he's paid on these big pallets, and they had the stuff delivered. He ended up giving it away to the poor a few years later. It had a life of about 48 4 years, and he ended up giving it away. So anyway, those are just one of the things that I remember from Y2K. I don't think this is anything like that, but we'll see. The problem is the media, folks. The media is not telling it like it is, because we have friends in Hong Kong that are right there in the fighting zone, and so we hear what's going on over there. So it's not quite as what they tell us in the news, for sure. Okay. Where do we stand right now? We got 1 minute till the break, and then we'll do it. The euro went down exactly to the price. This is what I put a three pip stop on it, folks. I'm risking $30, and if they get me, they get me, and if they don't, we'll have to wait and see. Right now, it's made $100, but we'll see. Let's keep an eye on it. Very, very important. All right, let's move on to the. What other question? The bonds are still holding up good. They're trading at 169.22, so the jury's still out. All I know is if we go below those lows that we made just a little while ago at 2074, in the S&P, we're already at 28.99, 28.98. You can see how quickly we're coming down here from a high of 29.30. These are monster swings with volatility, folks. This is what the day traders and these swing traders that we have look at. It looks pretty interesting. So let's keep an eye on this stuff as we move through the troubles of life here. We got gold trading down now at so we got as low as 615. Our target is $20 lower than that at 15.95. We could easily be there today, but we might hold this level. But I still think we're going to get there eventually. So we'll see if we get to that spot. So take a break here. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Boy, folks, you talk about volatility. You just think the Dow has gone from 25,400 down to 24,900, back up to 25,400, and back down again. We've had a 1,500-point swing in the Dow Jones today in the last hour and a half, and that is really big. Now we're getting really close. Looks like we're going to take out the lows here in the S&P and the Dow Jones, and that's not going to be good, folks, because that timing thing usually works pretty good, and that means that was a high that came in and not a low. So if we take out those lows, be very, very careful, because this is what's happened. Remember, we're down 10%. That doesn't mean we can't be down 15%. Remember what Arch said, that we have something really large happening here over the next few days, and we want to watch it very, very closely. And I think this is not the time to not work without stops. Look at this. We've had a 100-point move in the S&P here in a matter of about 30 minutes here. So here we're now, the Dow Jones is now making new lows overnight, and we're almost down to new lows in the S&P. That is not a good sign. So it has a bearish tone to it today, so be very, very careful. And that's what you really want to worry about, I think. So be very, very careful. Those are the last charts that I had. I don't have any more charts to go today. The only thing I can say is that someday there's going to be a big rally in these commodities, but when it's going to be, I'm not sure. All I do know for sure is that we're probably going to have a lot of volatility. That is going to keep increasing. I think we will take out the volatility high that we had in 2008, which was at 96. We're only at 47 right now, so we're about halfway there. And I do think we'll get to that point without too much trouble. That's really a bad sign now with the market making new lows so quickly. That tells you that the bearishness is still there, and you have to be incredibly adept here to watch it unfold. That's for sure. So live every day in an attitude of gratitude, and may God bless. And make sure, folks, that you do something nice for somebody that has very little, because there's so many people out there and they do need help, especially during these times like that. But don't help them answer the margin calls. That will not do them any good. We'll see you on the flip side on Monday. May God bless.